And we are back with another episode of the BLD Financial Podcast. And today we have somebody special with us. For those of you who don't know who Mark Loeffler is, Mark is a realtor, an investor, been around the space for a long time, has helped a ton of people purchase multifamily real estate, is one of the most knowledgeable guys I know when it comes to purchasing real estate. In Alberta, he's gone through everything from acquisition, stabilization, refinancing, seen markets up and down. Probably been doing this almost as long as I've been alive.
Pretty much.
Mark, I appreciate you coming on today. Why don't you tell the listeners a little bit about who you are, what you do, and what makes you tick?
Hold on. Did you just call me old?
Oh,
I was going to say,
is that what he
we're
just did?
aging Mark very well on this
Like,
intro.
what the hell?
So I'm
Jeez.
33. Mark's been in the game for 33 years.
I'm out of
Plus-
here.
Mark looks good for his age, though, if
I
anyone's
mean,
wondering.
damn, 33. If I was buying real estate 33 years ago, I would have been
33.
smarter. But I was
It's not just silver
I tried to
lights,
buy it
ladies and
27
gentlemen.
years ago.
Okay.
I didn't
So
succeed.
pretty close.
I didn't succeed 27 years ago, but yeah. You're only 33?
31.
Freaking child.
Yeah.
All right. Anyways,
Who you are, what you do, yeah.
who am I? What do I do? So I'm a multifamily investor now. Again, I've owned everything from duplexes, well, single family flips, rent to owns, duplexes, tries, fours, all the way up to my biggest right now is a 90 unit building. I've gone through every iteration in Ontario of owning, getting rents up, renovating, all that type of stuff. Burring, we did burring before burring was a thing.
You guys created the burr before the burr was a burr.
Yeah, so we created the burr before the burr was a burr because it just seemed like good sense to be able to recycle capital when you had a little capital.
Yeah.
So yeah, I've been doing this I've been investing now for 22-ish years. So not quite as long as you've been alive. I've been a realtor for 15 years and I've been helping investors from that day. Basically, as soon as I got in, investors started to knock down my door to help them buy and sell property. I've worked with some of the people that you probably had on this podcast or will have on this podcast that have become leaders in the field as well, that have either been on my team or I've helped like buy their first investment properties, who are now realtors or are just run funds and that type of thing as well. So yeah, I don't know.
You've done a lot of stuff.
I've done a lot of stuff. I've probably learned more about real estate or forgot more about real estate than you'll ever learn. So what do you want to know?
Yeah, I'm not dating me. You're dating me.
That was my grandfather's favorite line. So I'm going to start using it now.
It's a good one. Yeah, I mean, I talk to clients all the time who are looking to buy or who have been in the industry for a while, and everybody knows Mark. Mark, you sold a lot of buildings. The market we're currently in, it's kind of a pain point for a lot of people. We've seen people lose a lot. We've seen people make a lot. What do you make sense of, the current market? I think you've obviously been through many different cycles. Like, what are you seeing? What are you doing?
What are we seeing now? Here's the thing. Smart money's buying now, no matter where you are. Whether it's Ontario or Alberta, smart money is buying. Smarter money was buying in Alberta 3-4 years ago. That was me. And I told everybody.
Don't let him forget, Mark.
I had a YouTube channel back then, and I told everyone, and they all said I was stupid. And now who's stupid? Haha. No, I'm joking. Anyways,
Bone to pick.
but no, like back in Ontario, it's value investors right now. It's people who are like, I'm going to put 40% down on this property. I'm going to hold it for 50 years because they know that we're not going to build enough housing in Ontario, and that in 10 years' time, the rents will be greater in 10 years than they are today. So I'll just get it. I'll put conventional financing on it. I don't really care about the cash flow right now, and it'll improve over time, and I'll look like a genius in 20, 30, 40 years.
There's so much freedom that comes out, and obviously not everyone can just go and slap 40% down, but the freedom to be able to have that cash and just, I want to buy this building. You're not worrying about debt servicing. You're not worrying about having to take a bridge loan. You're not worrying about 6 months to close with CMHC. Yep, I'm going to go to my bank guy. I'm going to put as much money as I need down to be able to make it work with bank financing. Like you said, the appreciation of the long run is going to increase, especially in today's market, buying at where the interest rates are and where they're projected to go.
Yeah.
Well, the cash
even
still
not caring about interest rates.
Yeah, exactly.
What do I care about interest rates? If I'm buying today, 40% down, and my goal is to hold that thing for 20, 30, 40 years. interest rates in the short term don't really concern me.
Well, just focusing on like market cap and where the value of a building is going to come from. Obviously, yeah, if you're not taking loans, you're taking small portions of loans. It doesn't matter as much, but just from a value, like a market ad of appreciation and where those values are going to be as the cap rates shrink. Like, yeah.
Yeah, they don't really worry about that though. Like they're value investors, but they have to get they're going to buy at a cap rate.
Yeah.
They're not just going to go in and buy a sub 3.
No,
right?
They have that much money. There's no way they're burning it.
Yeah, they're buying at a 5.
Yeah.
And they're happy with a 5.
But they're cyclical buyers. You know, they're the ones who have gone through it and understood that, you know, we are at a point now in which you buy. You know, you're the pendulum is tipped,
Yeah.
and you're now in a market that you can, you know, make an aggressive offer. You can get the vacancy. You can have a handful of things done that's going to give you the ability to be able to make money on the buy. It's a very patient type of person who has the ability to wait out a cycle.
100%.
And
Not even just one cycle, but you know, you're probably holding these buildings for a few different cycles too. I mean, like these long-term, depending on how old you are, but you know, your cycle maybe 7, 8, 9 years. I mean,
why
some
did
of
you
these
look at
guys
me
are-
when you said how old you are? Jeez.
I'm just
Jeez,
looking for
guys are
you
ageist.
for guidance. You know, that's it. I mean, a couple cycles over
they call
here.
it
but
wisdom when you're that old.
That's right. That's right. Yeah.
But the way in which people are investing right now is changing. Obviously, you know, we have some legacy investors. We have very wealthy people who are looking to put money on real estate, put a large down payment down, get the numbers to work. There's also been a shift with higher leverage insured products, you know, that have filled the gap for the newer investors to come in. You know, we have an entire group of our population of people who are now looking to acquire multifamily real estate, and most people don't have, you know, $2-3 million kicking around.
Yeah.
You know, but they want to get in, and the emergence of these insured products to allow people to get in at higher debt, you know, is becoming a trend and a fad. And I think if you understand how the money works, you know, looking at places like Alberta, where, you know,
Alberta, Saskatchewan.
yeah, where these places work, you can acquire multifamily at decently low, even high leverage, but low equity in. You know, what are you seeing as an opportunity out there using these products?
Well, I mean, a perfect example of just before we jumped on this podcast, they're buying a building 5% down. I don't remember the exact numbers, but it's probably like 2.4, 2.5 million. So they're going to be all in on that building for 150 grand, maybe 200 with fees and everything like that. Right? And when you can buy a $2.5 million building that's going to cash flow from day one with such little leverage on a 50-year AM, like you don't need it to really do much, right? You just need it to stay the same, or, you know, improve a little, and you're making a ton of money.
Yeah, I mean, I think I find it interesting, and I've had this conversation with many investors just about the real estate cycle in Alberta. You know, you could talk about the good things, you could talk about the bad. It's very boom bust, and it has been historically for a long time.
I agree, and that was the one thing. So I started investing out there 4 years ago.
Yeah.
4 years, and so the winter of 2021 is when I went out there and started purchasing, and you know, back then we were buying stuff at 85, 90, 95, 100 a door all day long. And now like it's 120, 130, 140 a door minimum. And you know, it's just that cycle. It's going to boom. And you could see it back then. I mean, at least I could see it back then. And I still think it has some good runway. And I say to people, this time's different. Is it? I don't know. I'm not 100% sure. I think it is.
Why do you think it is?
I think it's different this time because it's not as much oil driven right now, right? Like oil's not shooting off the charts like it was in 08 and stuff like that, where you would have had, or 06, 07, like $110 barrel of oil, right? Like if we had 110 now, it's equivalent to like $80 back then or whatever. So you'd have to be like $180 oil right now for it to have that same effect. But the companies out there, like, it's not like they're just, you know, a guy. So back then, a guy graduated high school, he walked into a $120,000 a year job like that. He just, oh, you have a pulse, you're going to come work
2 feet in a heartbeat?
and not show up too high or drunk. All right, come on. And that's what it was. And that's just not what it is. They've scaled down out there a lot. So unless like the boom happens to start that up, that's not what's fueling this boom right now. Yes, there's more jobs out there. Yes, there's more opportunity, but I think it's just because they're more business friendly.
Or do you think it's affordability? Do you think people are going out there because you can actually have an affordable life out there?
100%. Like I don't know if you guys are in these Facebook groups, but there's Facebook groups dedicated to people moving from Ontario to Alberta. And they all talk about affordability, and it's affordable housing, right? Like that's what it's all about out there. It's all about affordable housing because like the rest, okay, so gas is a little cheaper, but you pay a little more for like hydro. And they don't call it hydro out there. It's electric because it's not made by a waterfall, right? You pay a little bit more for that type of stuff because again, it's a little bit more costly to produce out there.
Mm-hmm.
So but it's basically, like the average income in Edmonton is $106,000 household income. Average house price is like $350,000. So average person can buy a house out there and not be house poor.
Do you think there's still, I mean, obviously a lot of conversation around how quickly and more accessible it is to build in Alberta? Like, do you foresee potentials with overbuilding long-term in values, or like, are you on that page, or do you kind of think?
I am. So that was my biggest fear going out there, is that it's so easy to build that they're going to overbuild. And that's still a concern.
Well, they just opened up density. Was it Edmonton or Calgary where you can now have 8 units on a lot?
So Edmonton did it like a couple years ago.
Gotcha. Okay.
Any 50-foot lot, you can build 8 units.
Yeah.
And they're doing it like large. So you imagine that, like all those McMansions up at like Avenue Road and like whatever those Bathurst area and stuff like that. Those are all being turned into 8-plexes.
Mm-hmm.
They're all little bungalows on these 50-foot lots being turned into 8-plexes, and not like 8-plexes that we're used
stacked.
to. They're like 3 townhouses with 3 basement apartments and 2 apartments over the garage.
Yeah.
Right. And do I think that's going to get overbuilt? Maybe.
Absolutely will.
But here's the thing. I have such a gap between the rents for those properties and my properties. I don't see them as competing with me. Like the gap between a brand new condo and my building is like $500-600 a month. Like that's a different demographic renting those than renting mine.
That's a good point.
Yeah, completely. I think that, the people who are maybe developing for, that long-term land appreciation maybe, or like building appreciation over time, whereas like obviously you're strictly investing in cap rate, right? Like increasing that net operating income.
Yeah, it's a business, right? Yeah. I'm looking at NOI all the time. It's like, okay, how can I improve the bottom line of the business? Because that's what it's all about.
That is what it's all about. It's interesting, the fundamental shifts is when you talk to someone who invests in residential real estate and talk to someone who invests in commercial real estate, or it's all about just like the bottom, like investing in the efficiency of the building itself, just finding a way to be able to do that. And what we've seen from Ontario investors is just the shift from, okay, well, everybody saw everything was great. Well, rents were kind of lower, the legacy rents were lower, and it was easier to be able to do a BRRRR. Got really hard real quick, 30% increase in rent. Everybody went out there, and they're using the same economics here, but out there to be able to acquire. We saw a ton of capital leave Ontario and go to Alberta over the last few years.
Well, especially, MLI Select's changing the energy efficiency program, how many points you're going to get. You take a look at like how easy it is to make affordable rents work, especially in like Edmonton. If you're going to squeeze people to be taking advantage of a project that has to have affordable, you can go out to Edmonton, have affordable rents, and still be positive $200, $300, $400 in some areas on your rents and have that room for growth.
For sure.
Versus Ontario, you're losing $200, $300, $400 a month. Like you're automatically going to push people that way because the mid-level market they're value investors. They need to be able to get the most amount, and they're bang for buck guys, right? And that's where Alberta, Edmonton is. Yeah.
Well, it's so funny. Like you say the MLI here and there. I remember I just had gotten MLI closing out there, and I was like, oh, I have a building coming up for renewal in Ontario and Hamilton, and if there's any building that's going to qualify, it's got to be this one because they're all 1-bedroom or bachelor, and they all pay their own heating, hydro, everything else, all their gas, everything. So water, so their rents are lower because of that. And so I was like, oh, what's the MLI affordability for Hamilton? And they're like, it's $875 or something stupid like that. And I'm like, what? Like, it just made no sense to me.
Yeah. You got London, like London's like $990 right now. I mean, we're expecting some updated numbers at the end of, October, but even still, I mean, you're taking a look at just comparing 2019 numbers to 2024 numbers. And I mean, we're not expecting, like double the numbers to come in, right? So, I mean, we're going to be looking at maybe like 100, 150, maybe $200 increase in some of these areas, which, might help for these borderline towns. But, for the most part, like, especially given, I think, the way that the mid-level investors use, private investing and having to rely on high leverage takeouts to be able to pay back other investors or get out their money with low levels of liquidity. Like, they're going to need to squeeze out as much as they can. And affordable rents doesn't necessarily do that from the perspective of an investor. But unfortunately, like, it's that perspective that drives the new construction, the new development. If the numbers don't work, you're not going to have it, which is why we haven't had it over the last few years and why the numbers are the way they are.
Yeah, for sure.
Let's get into capital, Mark. I know that you have done a lot of projects. For people who are listening to this podcast right now, when you're acquiring multifamily real estate, obviously not the easiest to do. You have one of two options because it's debt service driven. You either put a very large down payment down to get the debt servicing ratio in line with the bank, or you take on bridge financing. Most of the time you'll use other financing to get the renovations done if you're not capitalized yourself, different debt structures and corporate structures. And then you'd move into some sort of longer term debt. Talk a little bit about some of the debt you've used on, acquiring these buildings, how you've gone about doing them, what's worked.
Yeah. So we always bought shit in Ontario, like literally sinking, fire damage, crack house, whatever. Like that was my model in Ontario. And so that was how I started, I should say. And when we did that, we always worked with a credit union, and they would give us 75% of our purchase price and finance 75 or 80% of our construction.
Back when prime was 2%?
No, this was like 2012.
Okay.
So I don't know what it was, 4.5 maybe.
Plus 2% on the bridge. You're like 6.5% debt.
Yeah, 6.5% interest only. Yeah. It was
the
good.
Best.
Yeah, it was good. Like it was fine. Like it was manageable, not 10% like now. And yeah, so that's what we did there. And then I got into more, you don't really need to do that so much in Ontario. You just need to turn tenants. So I built a portfolio of basically concrete buildings because I was really tired of wood frame, especially in Ontario. And I had a partner, and we basically went out and we would put 25, 30% down, and we just buy the buildings and run them normally. And when tenants turned over, we would renovate them and get the highest use for them. And then 2 years in, we would refinance them again and just keep doing that process. And we never used CMHC here. And I had a broker out west, and he's like, why does nobody use CMHC in Ontario? And I'm like, well, I'm gonna get less than if I just go to the bank. Mm-hmm. And it's gonna cost me way more. Yeah, sure, I save some money on interest, but it's like I'm just gaining that back from the upfront fees that I have to pay. So why wouldn't I just not pay the upfront fees, and I'll pay it over time, and I can write that off the interest instead of,
Well, there was a period where you didn't have to use CMHC to work. Like when 2020, 2021, we were underwriting credit union debt at like 3.5%.
Yeah.
25-year AM, but the projects worked at 75%. You didn't even have to turn the buildings over. You could buy buildings that were sitting around and get pretty close to that 75% out the gate without any sort of like tenant turnover.
Yeah, which is what we were doing. And then obviously that all changed, but we sold those buildings back in like 2020-ish, 2020, 2021. And that's when I started investing out west. And that was before MLI was even out there. And the goal was just, we would buy with bridge financing, renovate the building, and then exit to, it was just CMHC at the time, but then MLI came in and just gave us more money and longer term. So
you're just able to go out, and the tenant laws out in Alberta, for the people who are listening right now who don't know, like they're obviously weighed in your favor.
Well, I don't know if it's weighed in our favor. I think it's weighed in the realm of normality or business. It's a business-like transaction, right? The tenants are my customers, whereas here they're my adversary. I don't want them to leave out there. Here, I could rent to them in 6 months later. Typically, I want them to leave because I can get a higher rent for the unit, right? Right now, maybe not so much, but that's the whole thing. I don't want them to leave in Alberta. So I actually have to not be an asshole to them, and they have to not be an asshole to me. And, you know,
How's that going?
Yeah, not well.
well, I don't talk to them, so it's fine. I let
I got a
somebody
team
else
for that.
I let somebody else who's not an asshole talk to him, I guess. But I mean, so you say it's favored for the landlord. I think it's favorable for everybody. So
Yeah.
if I have a dickhead in my buildings that's causing everybody else issues in the building, which as we know happens, and it's ruining the enjoyment of the property for everybody else, I can get that guy gone in 2 weeks. Here in Ontario, I'm probably going to lose the good tenants for this shitty tenant, right? I've seen it happen over and over and over again, where the good tenant leaves and the shitty tenant stays. And then you're out that money that the guy's leaving, and you still have the shitty tenant that takes you 12, 18, 24, if you can even get him out.
Yeah.
Because if he's paying his rent, you can't get him out.
Yep.
You know, so we sign leases every year. So, you know, when you come to financing in Ontario, they're like, well, where are your leases? I'm like, well, here's my one from 10 years ago.
Yeah.
They're like, well, why don't you have a current one? I'm like, why do I need a current one? In Ontario, it tells me it goes month to month, and I'd be stupid to sign another lease with them. It's like,
Absolutely.
I lose some rights at least, right? Whereas in Alberta, I want to have leases with them. So every year I sign a lease.
It is funny, like just some of the chaos that comes around from the Ontario side and looking into that. And I mean, we get it all the time from the lenders, like, well, why isn't there a lease? Can we get a lease? Like, and it's just like, you would think at some point they would start to understand the operational, you know, system that is in Canada and why. your
Okay,
investors
you
are-
say Canada.
Sorry,
Don't say that.
in
It's Ontario.
Yeah.
Yeah. If they want to lend in Ontario, they should understand that.
Should.
I mean, like,
But they don't need to, because he who has the gold makes the rules.
the one thing I've noticed with real estate is that everyone understands how much of a, you know, kind of a little bit of a shit show that it is. Commercial deals don't close on time, or, you know, CMHC is taking 6 months right now, or, you know, this or that. But no one ever really seems to be able to give on either side of it, right? I mean, like, sellers want fast closing dates, but, you know, they're not able to accommodate for CMHC, or, you know, like it's kind of interesting that, like, just people know what the industry is like, but it's hard to get everyone to be on the same page.
Yes and no. I mean, I just put an offer in yesterday, and the person wants to close with CMHC. And I said, listen, we'll give you your price, but we need a 6-month close. And the person's like, yeah, fine. Sounds good. I'm like, okay.
1 in a million, though. Like,
I'd say 1 out of 8 in Alberta.
yeah, not in Ontario.
No, well, Ontario, it's people still have the same mindset of like when I sold my properties, everything I sold was in multiple offers.
Yeah.
Yeah,
Like
yeah.
that's what they're working off, right? Like it's not
2020 values. That they're-
Yeah, like I mean, I sold everything at less than a 3 cap, and I was like, this is stupid. Why would anybody pay anything like this? But like, I wouldn't buy the buildings for that, and so I was like, I'll sell them, sure.
It actually was amazing to see, or not amazing, but just like crazy to see how sellers were selling a vacant unit as if it was already turned over and renovated based off the sale value, because you had the ability to go in and get that rent. Like,
Because like the realtor is like, well, this guy's gonna buy your building that's half vacant at $2 million, but he's gonna go refinance it at like 3.5. So we shouldn't sell at 2. We should sell it like 2.8, because that, like, and they're pricing in that like value.
Vacancies has value here.
for sure. Yeah.
Yeah.
Out in Alberta, no. Like I'd rather have a full building, go in and raise rents $300 a unit, and then some people might leave and some people are going to stay,
Yeah.
and it's fine. I don't really care.
so where
I
you
do
where are
care.
you investing right now? So I mean, obviously Alberta's a big place.
Edmonton.
Calgary's awesome. Edmonton.
All Edmonton, all the time.
Why Edmonton?
So when I did sell my buildings here, I started to explore different markets. So I looked out east, I looked out west, I looked down in the States a little bit. So I chose Alberta in general from an economic standpoint and from a landlord business friendliness standpoint. And so then I looked between Calgary and Edmonton, and there's just way more inventory in Edmonton. So if I wanted to build a scale, then it would have to be Edmonton or like some of the surrounding towns.
You said economically, like, are all the jobs in Edmonton? Is that
No, economically it was Alberta.
Gotcha.
Edmonton's a more blue collar town. And it is doing better economically than Calgary. But like if people are moving from like Ontario, or like a metropolitan city, like and they're white collar, they're going to move to Calgary. If
Yeah.
they're blue collar, they typically move to Edmonton.
And just like the type of asset you're looking to acquire, kind of geared toward that blue collar.
Well, so here's the thing. Again, I was buying at $85,000, $90,000 a door, and my rents were on, say, a 2-bedroom, $1,250, $1,300. Whereas if I was buying in Calgary back then, a unit was going to cost me $180, and my rents were $1,500.
Mm.
So I was like, I'll take the cash flow in Edmonton. I'm fine with dealing with some homelessness and stuff like that, because you get that in any major city now.
Well, the cash flow is huge, especially when you're looking at specifically like MLI Select, but CMHC, where you take a look at an apartment building in Ontario, and you're trying to qualify at 95%, 50 they're squeezing out that 1.1 debt service. And we say this all the time. By the time you add in your insurance premium, like that 1.1, like you're sometimes just breaking even. You have a major replacement of something, like you're at a loss for the year. But I see buildings in Edmonton, Alberta, rural areas where you're at 95% loan to value, 40 RAM, and you're still at a 1.3, 1.4 debt servicing, and it's like the numbers are actually quite drastically different. Like it's 20-30% in debt.
You can still buy an 8 cap in rural Alberta.
Yeah.
And I think you need an 8 cap for the simple fact that, like, if Alberta itself has a boom bust, and bigger cities are going to be a little less boom bust, but the smaller towns are definitely, like, you could sit there with 20% vacancy for a couple years or something like that.
Well, I have a client right now who is doing a deconversion on a building. Each one of the people, I think it was like 12 units. Each one of the people who own those units bought for like roughly $200,000. He bought them, each one of them, for like $150,000 each. And every single one of the people who lived in those units took a loss.
I was talking to him this morning.
Yeah, they took a loss. To have the mindset to be in like an environment where people are just okay with taking a loss. Maybe it's my Ontario mentality of like holding it for that long and taking a loss, but I have a hard time just like seeing some sort of stability in a market unless fundamentally something is changing. Like unless you honestly believe that the immigration there is going to change things, that the jobs are going to change things. The fact that people who live there for a long time are willing to take a massive loss and hold that real estate for so long, it's just, it boggles my mind.
So you're going to see that less and less. So when I started there 3-4 years ago, people were in like the depths of despair. You're just picking up deals all over the place. Condo deconversions, we did like 4 of them. You're going to see that less and less, because every time we go and try to buy a building now, they're like, I don't know if I'm going to sell it. Maybe I'll just hold it for another year, raise rent another 10-15%, and then I'll sell it then. Right. And you're like, well, I don't think you're wrong. I can't really.
That's my business model.
There was a reason I was interested in your business. But...
Right. So but 4 or 5 years ago, I would tell them the same thing, and they told me I was nuts. I'm like, hey, no problem. I'll buy your building then. No problem. Let's do the deal. Right. So.
Well, it's like
it's inevitable.
Hitting that hits the like nail right on the head there. Like if you think about it, like investors who see an opportunity in a market before everybody else sees it, they're the ones who are the most profitable. Like if you saw that before everybody else, you deal with the emotion behind where they're at in the cycle.
Mm-hmm.
A lot like we were talking to somebody a little while ago, and they were talking about just like where we're at in the cycle of like development for like mid-rise stuff. Like we're at a time when kind of the stars are aligning. So like if you can find an opportunity and you see it before it's happening, you're going to be poised to make a ton of money.
Yeah.
And the people who understand or who have like insider knowledge or insider like insight into these things, they're the ones who usually do well. So you got people who listen to this podcast, people who are probably watching it and who are thinking like, how do I find an opportunity? Like the opportunity is in understanding, like
the opportunity is in going out and looking at different places and looking at different tools and different models and different ways to do these things. Because I mean, again, I looked at Moncton, I looked at Alberta, I looked at Saskatchewan, I looked at Ohio, I looked at Texas, I looked at Florida, I looked at Arizona, and I did all the metrics and I narrowed it down to Alberta. And then, okay, now it's time to get on a plane. Let's get on a plane to Alberta. Let's start looking at more deals. Calgary deals, Red Deer, Edmonton. Okay, Edmonton deals look the best to me. What can we do? Okay, and then we keep moving forward, right? And then we just buy a bunch of buildings once you've made your decision.
So for people who are looking possibly at buying buildings in Edmonton, obviously most of the people listening are probably from Ontario, or I'd assume so. Where's the best place to buy in Edmonton? I mean, pre-existing multifamily. I know it's kind of like a big, like, kind of rectangle, but like, there's a lot of new development on the outside and outskirts are happening right now.
So there's infill, a lot of infill in the city too.
Yeah.
I like to buy right next to those infills. I like to buy in neighborhoods where they're doing maybe not the 50-foot lots into 8 units. Yeah, I do. I don't mind that. But typically where I'm buying, they're tearing down something and building 250 units. So I like to buy the 40 unit beside that 250 unit.
Sure.
And I like to make my units nice so they come in and they're like, oh, I get to live in this great neighborhood next to this 250 unit property, but I get to do it at
A fraction of the price.
2/3 the price.
Yeah.
Units looks just as nice. Rent's not quite as high.
Yeah, and maybe I don't have a swimming pool or underground parking. Say la vie.
Yeah.
Agreed.
Yeah.
I was shocked actually when like every time we go to Calgary, how many smaller multiplexes have like underground parking. Like it's great, like 5 unit, 6 unit underground parking.
Well,
Like, it's pretty crazy.
You can do that there because land's more expensive,
Yeah.
right? Land's so cheap in Edmonton that it's like, yeah, put parking outside.
Yeah.
But yeah, it was
Or it
crazy.
used to be.
Because
I
like
don't know.
you understand the cost in Ontario
Yeah.
to dig a foundation. You're like, man, like, how are you able to actually make that happen?
Well,
Yeah.
I mean, if you wanted to, like, seriously, like, there should be no above ground parking in Toronto or any major city in Ontario because you got rid of that and you just put your building envelope, made it bigger. Well, you're going to increase your density, right? Without increasing too much land use, and everything goes underground.
You might as well. I mean, they're already getting rid of parking. I mean, like you take a look at like Oakville and what's going on there, where the amount of new units are putting up. It's like you're like 0.75 parking spaces per like unit, and it's like
I had a condo
parking
that
is going away.
somebody was trying to sell in like a Etobicoke area and had no parking.
Yeah.
And I'm like, why wouldn't you get parking? Like it was 20 grand or something back when you bought this. Like you're silly. Like you could easily be renting that for $100 a month, that spot.
Yeah.
Even if your tenant didn't want it.
It's also gonna be super difficult to sell your house.
You couldn't
now.
sell it.
Yeah.
Couldn't sell it. And I'm
Yeah.
like, oh, but it's on the subway and it's whatever. And their tenant doesn't have a car. I'm like, that's fine. But whoever's going to buy this wants a spot.
Well,
sure.
even as in real estate investors, I went and took a look at a building yesterday in Kitchener, and it had 14 parking spots, and I think there's 21 units in the building. And it's when you're looking at like acquiring these buildings, you got to ask yourself, like, even if it's partly stabilized, you're going to have less people want to buy it at a higher rent if rent is going to move higher. Like it's a detriment to you as an investor if you don't have enough parking for your building.
Well, it's going to limit the people you get in there, right?
Well, you gotta ask yourself, yeah.
If you want that higher rent, typically they have a car
Yeah.
Well, the
or two.
yeah,
or two.
they're going to both need to
Yeah,
work.
you got
Yeah.
you want a stable family coming in and living. You got 2-bedroom, or maybe some of the buildings that even have like 3 beds. Like, yeah, you want a family that's making good money. They're both going to work.
Yeah.
It's 2 cars. Even my building, like it's newer built, 4 years old now, and it like only has 1 parking spot per unit, and it's a newer build, and it's crazy to see that the parking, it really is disappearing.
It's so difficult because the cost of development is so high now that they're trying to squeeze every dollar they can from.
Hey, listen, maybe
the
Elon's
units.
right, and these robo-taxis, robo-Teslas will be the way to go, and that'll happen. But right now, that's not happening.
I think you can start seeing like those automated car garages, right? Where you got like a
stacked,
parkade on the back, and it's just you press your button, your car swirls around. And I think realistically, where else do you go? Like other than
But again, like the land's value has to get to a high enough point where that becomes efficient to put in.
Yeah, well,
I think in Toronto and like Vancouver, New York, those types of places, like that, the cost to put that in would outweigh the whatever the
cost.
the
The
cost
rental,
or
yeah.
the whatever. But because you're going to gain so much more real estate, right?
yep.
yeah, even with like the new zoning, like I think it's called SGA2 zoning now in Kitchener, near the light rail transit system or any high frequency transit system now. Like there's zero frontage or setback from the road now. You can go right up to the road, and there's limited parking requirements as long as you're near some high frequency transit lines.
But is it for students or?
Well, I mean, I think it depends on where you think things are going. If affordability is going to be fixed and people can afford homes again, then no. Like, I don't know if the increased densification is specifically for students. Unfortunately, I think it's for Canadians who are going to have to deal with an affordability issue. You're going to have smaller units and close to.
Well, I mean,
places.
they're already seeing that, right? Like, I mean, I sold the property. Well, you met them at your meetup the other day, and they can't get a tenant out. And the tenant's just like, well, I'm not leaving because I can't. What I can go and rent for the same amount, it's going to be too far. It's going to be a basement. I'm not gonna enjoy it, so I'm not gonna leave. You're gonna have to take me to court to get me to leave.
And that's a good tenant who pays their rent on time.
Yeah, and they're clean. They're courteous, but they're like, I can't afford anything, and I don't want to live in a basement.
That's the reality of almost all the units in Ontario right now who have legacy tenants. Like, it's just out of necessity they can't leave.
Yeah,
you know,
and there's nothing to help them, right? Like,
no, it's that disconnect though. It's like people want new units, people want new inventory, but they don't understand what actually goes into building new rental units and what goes into building, new for sale condo type products or freehold or whatever it is that they're building. Like, and there's no government assistance to come in. It's like someone has to be able to actually come in and kind of mediate this issue, because it's not, you're just going to have people butting heads all day where the developers are like, look, I would give you an affordable unit if I could do it and still make the money. Like, I can't do it for free or at a loss. And it's a giant fight.
And
like,
then you get like when new councils come in and new mayors, and then they raise development fees 250%, and it's like, whoa, what's going on here? Like, we can't make affordable before, and now you want to charge us $100,000 a unit just to be able to have this design or whatever before we even put a shovel in the ground. Like, this is, and it's like
something's got to give.
Something's got to give, right? Like, you can't talk out of both sides of your mouth.
No.
Well, I think you see the developers are going to sit there and they're going to say, okay, well, we won't build then. And then you're going to really have a problem.
Yeah.
Well, they already are.
Well, they already are. Like, where's any major building going on right now?
Purpose-built rentals.
Yeah, there's some purpose-built rentals, but still not enough to, like, I think it was Hamilton when I was on a board with CMHC for like housing affordability in Hamilton.
They let you there?
Yeah, 100%. It's so. I'll tell a bit of a story of that one too.
We do like Mark, by the way.
Yeah, no, Mark's a great guy.
I give as good as I get, so it's fine. But what was I saying there?
Housing affordability, CMHC.
Yeah.
Alzheimer's.
Anyways, you'd stop interrupting me, jackass.
This is why nothing developed.
I don't develop
the
anything.
Input was minimal. That's why he doesn't have to see it anymore.
I forget exactly what I was going to say, but the good story from that one is, because this is what prompted in my head, was I was on a panel there, and they're like, well, where are these people paying $500 a month going to go? Because we were gentrifying. It was gentrifying. This was back 10, 15 years ago. It was gentrifying downtown. And I'm like, they're going to move to Welland or Windsor. And one of the affordable housing people actually said, you know what, he's right. Like, they're like, it's not a human right to be able to live in that place.
Mm-hmm.
Okay, a human right to be able to have affordable housing, but maybe they got to move. That's the
conversation, right? Like,
they're just entitled, right?
Yeah.
Like, it's like, oh, like downtown Toronto, maybe, but I mean, they put the services right next to them, and then they don't put services in these other areas. So if they move, they lose the services too, right? It's kind of like there's no planning. There's
zero planning.
I mean, you figure the government's going to do a good job
have.
of planning, right? I mean, God, like that's their job and shit. So, and to spend our tax dollars wisely.
Yeah, well, that's it. It's you start planning things, you get like efficient costs, and then your budget goes down slightly, so you don't need as much money, and then it's almost like a negative loss of income to the government to be a bit more on top of things. And
yeah,
but at the same time, it's funny, like you could get away with raising the cost of things. You want to keep increasing like your DCs and your permits and whatever, that's fine. But if you actually provided like an increase in service along with that, people would just pay it. Like, people wouldn't have as much of an issue paying, 4,000 times more for their DCs if they got, you know, a 3,000 increase in service at the same time. Like if it kind of matched.
You would have to clean slate everything. I'll just give you an example. I have a friend, his buddy works at Toronto Community Housing, and they had to go do all these site visits and do all these reports. And so like he went out and he was managing all these buildings and doing everything. And he comes back and he's like, man, I'm exhausted. The guy's like, oh, what'd you do? And he's like, I went to like 12 buildings this week or something. The guy's like, oh man, I never do more than 2 or 3. And he's like, well, how do you get to your whole portfolio? Oh, I don't worry about that. And so then the guy doing like hustling to get everything done, he's like, oh, well, why am I the jackass working so hard? And this guy, like, they're never going to fire this guy. Like, well, I'm not getting promoted anyways, so why don't I just do 2 or 3 and enjoy my life?
It's
You're
systemic.
describing like an entire like class of like individual too, though. I mean, like
Canada has a huge amount of government employees, so I'm gonna be quiet.
I just think of I think of Elon talking about helping Trump clean out the service there, and I was like, oh, maybe he'd do that for Canada.
We have major inefficiencies in our government. I think like the amount of government jobs that have been created over the last little while are artificially
Gigantic.
keeping our employment
for
numbers
sure.
up.
Oh, 100%.
It's not a great way to be able to stir up growth.
Yep.
And unfortunately, the more you hire, the more bureaucracy you have.
You don't have to worry about, you know, like desks and office space when everyone works from home at the same point. Everyone has their own home office. It's not like, hey, our capacity is 250 people in this building. It's what's the capacity of a city or a province that we're hiring out of, you know?
Yeah.
Everyone works from home.
And that's what I like about Alberta too, is just less bureaucracy.
Mm-hmm.
The city of Edmonton actually went through and cut all red tape. Like, okay, where's the red tape? We'll actually figure this out, and like we're gonna chop it.
Well, the only province that had like positive numbers in the last like
Yeah, they didn't run a deficit.
yeah.
Well,
They actually put money into their fund.
and listen, they're gonna only like lead Canada in GDP increases for the next 49 years or
Yeah.
so. That's all that they're projected to do. So
Yeah.
That's all.
that's all. Only the next 49 years. So
Yeah.
So, I mean, you've seen markets, you've seen cost of capital increase, decrease over time. Over the next, let's say, 2 or 3 years, where do you see things going as rates start to come down, bond markets start to stabilize? What do you expect from like real estate trends moving forward?
I think prices are going to be in Ontario are going to be relatively flat until spring, summer next year, and then we're going to see maybe some increases. Alberta, I think it's just going to be on fire. As rates go down, it's like pouring gasoline on a fire.
Yeah.
Right? It might just, even if it's smoldering, it's going to flare, right? So, and that was part of my economic thesis when I went out there. I'm like, okay, I think Ontario is going to go into a recession. And what happens when Ontario goes into a recession? They lower interest rates. And they pushed Ontario into a recession. And they're going to lower interest rates to get Ontario out of the recession. And the increase in interest rates really didn't hurt Alberta because the affordability was there.
Mm-hmm.
Nobody gives a shit if they're paying 5%, 6% on a mortgage on a $300,000 house that they can actually afford.
Less impact.
Right? So, because they care like, oh, I can make this much of my monthly payments, $100,000 mortgage or $100,000 income, $300,000 house. Like, okay, I can afford to live there, right? Like actually after tax and have a life and whatever. So if I have to pay an extra $200 a month, it's not going to materially impact my life. Whereas in Ontario, obviously we saw people getting crushed under it.
Yeah, $1 million mortgages.
Yep.
Or more. It's the amount of debt definitely had a direct impact on how things moved very quickly too. I think I remember it was like a train hitting a wall. It was like one day things were moving and nothing.
Yeah.
Yeah.
Well, I mean,
March break.
Yeah.
Yeah.
March break came back. It was like, boom, gone.
Yep.
There were like almost like a 2-year period where like it was almost impossible to not get a mortgage. I mean, you were underwriting a stress test for A and B lenders at the exact same 5.25%. And it was like, you're going to be, like 3.25 with an A lender, or you're going to be like 3.75 and some fees on a B lender. Are you okay with that? Yep. Here's your house. Like,
Yeah.
you almost couldn't not get approved. Like, it was just so it was just so easy. And then, yeah, one day it was just like, oh, like you got to go back to kind of like brokering again. Like it was like, you actually got to
God, I
figure
gotta
out like
do
how to run
work.
some
Oh my
numbers.
God.
Like it was
It was all
crazy.
we knew at the time, though. We just knew,
It was, yeah, it was pretty.
we thought we were geniuses. Well, I thought their debt was just that level.
Yeah.
Some intelligence there, but
Yeah.
I mean, my first mortgage was 7.35% ever.
And how much was your mortgage?
190,000. Yeah.
Yeah.
And my rent was, what was I making? I was making $1,800 up and like $1,350 in the basement. So
Wow.
there you go.
yeah.
Jeez.
The first house hack. You guys heard it here first.
Yeah. Well, then I moved like a couple times, and I bought a house in Toronto, and I bought that for $280 or something, and my mortgage was $275 because I did what did I do? I did 5% down with like 4.5% cash back,
Yeah.
Wow.
and yeah, my tenant was paying me $1,700 a month or something, and I basically lived. I had to pay my own the taxes and obviously utilities.
They were
Which
giving
we split 50-50. So
giving houses away for free.
they were.
Well, even like the old rental programs, like I think it was what,
Oh,
like this is like
100%.
early Scott McGillivray days, where like literally you just had to show the building was like debt servicing, and it was like, here you go, here's your.
So before I got licensed as a realtor, just before, it was like 100% financing, 40-year AMs on rentals.
Yeah.
And it was like, this is like shooting fish in a barrel. Like you can,
Why
okay,
didn't
ding, 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 ding. Like,
why didn't everybody just buy all the real estate?
well,
Because we were in
Oh.
public school.
Yeah.
yeah.
Like my biggest regret in life was not doing it. When I was
Was
7.
being in
Yeah.
public
I was
school.
playing on the playground and not buying real estate.
Yeah.
That was, yeah.
That's wild.
Yeah.
So I mean, I think you see, echoing just what you said. Like I think you see some stability kind of hit rates. People maybe start to buy again next year when things stabilize out. You start to see a little bit of life in the market from an affordability standpoint as rates come down.
Well, you're already seeing the pendulum swing, right? Like it was so tough to get mortgages.
Yeah.
And now you're seeing CMHC walk back a whole bunch of stuff where like, 1.5 million on CMHC. And now it's whatever that new
Fourplex
refinance
Yeah.
thing up to 2 million. Like they're starting to walk back a lot of that stuff, right? So
You guys find it crazy how like 3 months ago, Freeland was like, we're going to make homes more affordable. And then like 3 months later, she's like, we're going to make it more affordable for you to buy homes. We're just going to make you take on more debt at a longer rate. And then
Now there's not going to be any single family homes because they're all going to be fourplexes and threeplexes, and
crazy.
but listen, you go to other countries and that's what
that's
it
what we were
is,
saying
right?
earlier,
Like
yeah.
it's
you go to France, there's no
anywhere
grass.
in Europe, anywhere in Middle East.
Yeah.
Like it's only in places that have developed in the last couple 100 years. Like you go to Australia and they want their quarter acre of land, right? It's that mentality where like, oh, well, we came here and it's newer, so we're not going to go back to the old style.
Yeah. Well, you own like any sort of detached home. You have like a luxury house. You have like a front yard and a backyard. That's luxury. Like
Yeah.
it doesn't matter if it's a $500,000, $600,000 home,
Well,
front and backyard. It's a luxury home.
here's
man.
the thing:
Like,
a fourplex. I had a friend come over from England when I lived in my duplex, and they're like, "Oh, you own up here?" I'm like, "No, I own the whole house." Like what? Like because it's a flat, right? People just buy a flat in a house,
yeah.
so they would
Which is wild.
subdivide it, and like you buy the flat in the house, and that's it. So
Yeah.
It's coming. Look at those 4+
Is it?
ADUs. A lot of the long-term strategies are to eventually condoize it in a decade and then sell them off individually. Like that is, I guess, the future of where things are going.
so you can do it in Alberta. You can condoize them and sell them already. So
Yeah, I think a lot of it's like a cost per square foot play. Like they're just gonna wait until the GTA
Well,
cost.
yeah,
get enhanced.
eventually that's all people are going to be able to afford is a piece of that, fourplex or the garden suite in the backyard. I mean, not that like from a policy standpoint you can't buy it now. I think it's more from like a necessity standpoint. People aren't quite willing to do that yet, but I mean, yeah, it's eventually you're going to squeeze it out. Everything. I mean, you look at Toronto, like major roads, transport areas, the right of use that's coming into play. I mean, that's going to change. everyone's already jumping on the 4+1. That's probably even going to jump up to like 6 or 8 units in Toronto at some point. Like, you're just going to squeeze people out of these, normal, detached, semi-detached, standard, single family home. It's not going to be a thing, really. It's probably going to move more to like a flat or a stack or some sort of basement walk like type situation. You're not going to have these detached homes. Definitely not detached homes, for sure.
Who knows? Not in my lifetime, I don't think. But
How many years?
Well, yeah.
2, 3?
55 at least.
I'm joking.
101. I'm going to live to.
Yeah, no.
You're on that MLI amortization.
That's right. I got to pay off the mortgage.
They ain't going to let me die until I pay this thing off. Mark, been an absolute pleasure, man. Thanks for coming and talking today about real estate with us. For our listeners, is there one thing, if you could leave them with, what would you leave them with and why?
Don't compare your insides to other people's outsides. You don't know what anybody's going on inside. So don't think what you're seeing is what's going on. And I mean, that's especially truthful with what a lot of real estate investors are going through right now in Ontario. You saw what they wanted you to see, but you didn't know what was going on inside. You still don't. So don't compare your insides to other people's outsides.
I love that. Appreciate the wisdom and words. If people want to get a hold of you, we're going to have your contact information down below.
Just Mark.Loeffler13 on Instagram is the easiest way.
Okay. You guys heard it first. The man, the myth, the legend himself. Mark, thanks so much for coming on today. For anybody who is listening, we appreciate you guys listening and tuning in. If there is a topic you guys want us to talk about or somebody you would like us to talk to, please let us know. Reach out to us. Ehren and I's contact information is going to be down below. And we will chat with you next time. Thanks for tuning in.